One time for the underdog. One time for the underdog. You got the world on your
Hey guys, what's going on? Welcome back to the FX220 YouTube channel. This is Oussama, expert Forex trader and mentor, and in this video we're going to analyze my GBP USD trade that I took yesterday. So I've got many messages saying you should analyze this trade after I posted on my Instagram and Facebook account. Also, like many of the students have took the exact same entry. So congrats on everybody who traded this. And to everybody who didn't, I will explain it to you here, and make sure to learn from this so next time you'll be prepared and ready to go. So it's not a bad deal or something very bad if you've missed a trade. It doesn't really matter. You should forget about it immediately. Just analyze it, learn from it, and prepare yourself for the next one. So starting here on the pound USD, we've seen like we started to see like some strength from the pound. We had this very big run to the upside out of our support levels here between these two monthly levels and daily levels. So you'd expect something like that to happen because this is picked up quite fast. If you check like the 4-hour or the daily time frame, take this off. So compare this downtrend and how long it took many candles, many days. This is about a few weeks, and compare this one right here. This is a very strong run that didn't take much. Took about a week, 7 days. Okay, so this indicates for us that the momentum is to the upside is quite strong, and we had a pullback from here, also bounced off one of our daily levels, and then again gave us, look at this daily candle, it's similar to this one. So this indicates that the pound has some strength. Okay, and it picked up. Long term, I know we're bearish, like very long term, we're expecting price to fall and everything, but notice here that price did not create a lower low than this one. Okay, so that don't indicate for us a continuation of the trend line. But if we had like this close below here, which is lower than the previous low, this is the previous low. If we close below it, then this may indicate for us that the downtrend may keep continuing. But look at this momentum to the upside. We have a shift, strong shift in the markets, and we were trading in line with that shift yesterday. So price did pull back to one of our daily levels and gave us like a directional move here to the upside, as you can see it, and we're expecting some kind of a big move to the upside also. So let's start by analyzing this. We had many news releases during this day. It was absolutely crazy, especially at the start of the European session. Notice here these false moves. Most people would go up, go long here, but this is late Asian session, start of European session, this start of Paris and Frankfurt, then London. So many false moves happen during this time, and avoid taking trades during this time, especially when you see there are news due to release. That's where most traders get stuck and they lose. So you better wait until mid-session, wait until the news are done, so you can get a very strong directional move, a strong confirmation. So we had price bounce off the 200, then fall down, break it, then create a very like steep move and a stop hunt. So when you see something like that, you expect it's going to be a big move, because this was the 61.8 of this whole move. So you take it from low to high, this was the 618, the golden fib level. So for everybody, let's say, that went long here, and all this stuff, they gotta stop them out before they go up. I've explained this many times in my videos. So that was very steep, and most people would go short here. After they see this, they would go short. Okay, market is falling, but not for us, because we know that the market cycle indicates that this is an uptrend. We've analyzed this, and we know that there are news releases around this time. They may be used as stop hunts, false moves, exactly at what happened here. So after price created this looked like a bit of a V formation, then boom, we went up, and now we had our like confirmation. Some people could have entered here. I simply did not, because there was the Brexit meeting that happened around this time at 3 p.m. my time. It was around 2 p.m. London time. And I expect these wild moves also are due to Brexit, some Brexit news. So I was aware of this one. So I said, okay, this is the start of New York session, and New York session is known for the false moves. You know what I mean? The start of it, especially when there are news, it's known for the false moves. So I'd wait for the stop hunt. This is how you guys can anticipate it, if it's gonna be a W or a triple bottom. When you see news, especially a big, like an important economic release, such as this Brexit meeting. So if people entered here, they would be on drawdown, big drawdown. If they entered on this candle, they would be in 50, 60 pips drawdown. Okay, this is massive structure. So I do not advise that you enter here, especially before the news. So I waited after the news. We had our news release was here, the meeting started here. And boom, after that, we got our confirmation, strong confirmation candle. And from there, the trade went smoothly. This was also a news release that caused the market to pull back. Then boom, market went for total 53 pips. So my take profit was 37 pips. I did not stick to the 20 pips rule, simply because this is a big structure. So if you take 20 pips here, and your stop would be like massive, okay, your stop would be around these areas. Even if you put it below here, it's massive. So the risk reward is significantly unreasonable. I know, guys, I told you to not pay like so much attention on the risk reward, but keep it reasonable. Do not have setups like this when you're risking, I don't know, a lot, and you're only going to win 20 pips. No. And setups like this, if you want to go like this, you better put your take profit like this. So this is reasonable. 92 pips, you're risking 98 pips. It's roughly 1-to-1 risk reward. Okay, but do not go like this. It's simply unreasonable, and I never advise you guys to do like this. I said it's okay to have like a risk reward that is give or take 1-to-1 or 2-to-1 or positive if possible. So let's say you put your stop here, and if you put your target here, that's a positive risk to reward, as you can see. So try to make it positive as much as possible. If not, try to make it 1-to-1. If not, like, do not make it very unreasonable, especially in a setup like this when the structures are big. I definitely lowered my risk here. I did not went hard like I always do because the stop is big. You don't want to go with 20 lots with your stop like 60, 63 pips, or you know what I mean? So if you used to trade with certain risk, cut it to half so you can absorb that. Okay, and you still make the same profit because your take profit is high. So you can see here price went for more than 53 pips if we count it like really a solid move. Okay, was roughly 60 pips from entry to this one, like a safe take profit. So if you've got your target at 30, 40, 45 pips, that would be good. And trade your stop along the way. I trade my stop after this candle because this was already like, from my entry to this candle was 22 pips. So you don't want to go from 22 pips to losing trade. So boom, trade your stop, risk-free trade, zero risk, and unlimited reward if you want to hold. So this trade also met all the criteria. So we made sure that following our criteria, make sure to watch my video on my personal criteria. It's on the YouTube channel. Just look for criteria for 100 to 90% to 100% win rate, and you will study it, and I hope you find it helpful. So I know many people have problems with correlation. So let's look at correlation and try to see. So let's take the same exact time at most currency pairs, the majors. So euro around this time, you see, was trending up. As you can see, it was here. It was basically the same setup with the euro. You could have entered around these candles and bagged your pips. You could have been out here 25 pips. So the euro, the USD CHF reversed exactly at our entry. So this was our entry on the pound, and this signified for us, okay, this is a strong reversal and the dollar is falling. At the exact same time, we want to analyze the immediate correlation. Okay, so when trading around this time on this pair, you want to analyze the same time on all pairs. You can take all of this into consideration, yes, but analyze the exact same time. Don't tell me here like the pound is strong where you analyze this, but you're trading around this time. Okay, so keep it specific. Pound USD, okay, we have it. So AUD USD. So AUD USD, not like a very strong trend, but it was trending up. It was indicating that the dollar is weak, although the AUD wasn't like significantly strong, but it was trending up. So that's another confirmation. Same as well. From NZD-USD was clearly trending up, like a strong uptrend. You can see it. The overall move is uptrend, and the immediate move is uptrend also. So this all indicates for us that the dollar is getting weak. If we analyze, let's say, USD JPY or USD CAD, USD JPY was going completely sideways and started to reverse here, so you can see it. That also indicates that the dollar is not strong. USD CAD around our entry was like going a bit of, maybe this was CAD news. I do not trade the CAD. I don't even have the CAD news on my economic calendar. So around our entry around this time, it was a bit choppy, but still trending up, maybe due to like CAD weakness. Okay, so you want to take a major look at all the currency pairs and then be able to build like and execute based on great decision, because we've looked at many currency pairs and we knew that the pound gained strength here. Okay, take this into consideration. Pound is strong, USD is weak. Boom, perfect trade. Okay, so keep it simple, guys. You really do not need to complicate it, and regarding these moves, you certainly don't want to trade this. Look at this candle. It's a huge, man, like 65 pip candle. So if you've seen this major candle like close here, just close your trade and call it a day. You don't want to trade like this. This is still a setup. It's a W setup for formation, but if you enter here, look at how big your stop is going to be. So stick with these simple setups, guys. Study them, try to improve, and I'll promise you there will come days when you master these setups and these zero drawdown entries and be able to be consistent. So alright traders, thank you so much for watching. I hope you liked this video. I want you to smash the like button and don't forget to subscribe for more videos like this. Also, make sure to follow me on Instagram and Facebook. You guys should not miss this, okay? I post everything about my trades. I share a lot of articles and some really beneficial stuff on my Instagram account, like some take profits, and you can see, like, check the testimonials from the students and all the information about the mentoring program. You can also DM me or message me on my Facebook page for that, and I'll be happy to provide you all information about it. So until next time, good luck and good trading. This is FX220.